Hey everybody, Stuart Heath here, CEO and founder of Harvard Grace Capital, with this week's nerdy numbers for the week of December 1st, 2025. Everybody talks about interest rates, and let's just get out there. The Fed is going to cut interest rates another quarter of a point next week. I guarantee it. I promise you that it's going to happen. The market's already bought into it, and it just makes sense. No matter how much equivocating and stuff that Chair Powell and other Fed governors try to do, it's going to happen. The votes have pretty much already been counted. But the other thing that we don't talk about as much, and it's because people don't really understand it, is that today Fed Chair Powell announced on Twitter that quantitative tightening has stopped. They are no longer going to be engaging in QT. And effective today, and they're going to leave their balance sheet at $6.5 trillion, unbelievable, of basically federal government securities that the Federal Reserve owns. $6.5 trillion that they own. And so they're no longer going to be selling those assets into the market. And when they sell into the market, that means they get cash for those, and that's pulling liquidity out of the market, which is the actual opposite of quantitative easing, where the Federal Reserve buys these assets and i.e. puts cash back into the market and back into the economy. So this is great news. That is a monetary tool, QE and QT, that they use to fight inflation or massive swings in the economy. A little bit like a faucet, if you would. You control the faucet by how much liquidity is going into the market. And right now they've just turned the faucet off. They're no longer pulling the liquidity out of the market. So what does that mean? If the Fed's not going to get the liquidity will stay in the market. It will circulate around either from the government to private entities or other private entities that would have sold assets to the Fed. And those people will do other things with that liquidity. They'll invest in projects. They'll buy stock. They'll buy real estate. They'll create jobs in maybe a startup or whatnot. It's going to go into the economy. Mostly in the United States, but also throughout the world. And you combine that with interest rates coming down another quarter of a point, and many people think it will continue. They will do that at least 2 more times in the first half of next year, and that puts rates about where some experts think they should. You can always find an expert who thinks that they need to be higher. So this is great stuff. Sorry to get a little nerdy on you, but this is nerdy numbers, and where all I think that this shapes up is a great time to be buying assets over the next couple of years. I know I keep saying this, but the announcement that QT has ended just makes it even better, because there's going to be more money. If anything, it might make our job a little bit higher, because there might be more money out there trying to chase the same deals and assets that we're wanting to buy. But it should make them a little bit easier to buy. So anyway, happy to talk with anybody about this. Love to hear from you. Reach down and click that link, and let's have a conversation. Thanks. Bye.